Craig.
Jason.
Guess what?
What? I want to hear it.
Guess what we have today?
Barney?
No, we have the best podcast ever. The best tax advice ever with the phenomenal Courtney. Epps.
Buckle up, it's the Insurance Dudes Podcast.
Hello.
Hi.
How are y'all?
Good. How are you doing? Hey, Courtney. Yeah, we want to see the reaction. Like what? Because you had this like angry, confused look on your face. It was great.
Where are you?
These guys.
Hear me okay?
Yes.
Yeah, sounds good.
Okay, good. Right.
How about us? Let's do a Verizon commercial. Hey, Verizon. Can you hear me now?
I can hear you.
Can you hear me now?
It's good. Yes.
All right.
All right. Well, where are you located?
South Carolina.
South Carolina.
Yeah.
Whereabouts?
In Greenville, South Carolina.
Cool. Nice.
Greenbow.
Yeah, Greenville.
Is it Greenfield? Ville.
Yes. It's close to the mountains. Asheville.
Then why isn't it Green Mountains?
I don't know. There's no mountains here. You can just see the mountains.
Okay. All right. Well, welcome to the Insurance Dudes.
Thank you.
To have you. I think Jason may fall asleep in the middle only because he didn't sleep last night.
Got it. You'll like it, Jason, I promise.
He had a baby.
I personally had a baby myself, and
Wonderful. You had one, yep. You look like it. I'm sure you just got out of the hospital for this.
Pretty much. Yeah. So I got a good 2.5 to 3 hours last night, somewhere in there.
Well, congratulations.
Thank you.
How's your wife doing?
She's doing good. We have 3 other ones, so we have 4. We're collecting a big set.
I have 6.
Oh,
that's good.
I got the deuce and said, that's it.
2's a lot, you know. But 6 is definitely a lot. It's fun though. It's just we homeschool all of our kids, so it's
nice.
It's not bad.
So do we. Wow, you are a saint.
I mean, that's nuts. Like going to the store or whatever. I mean, having to handle 3 and 3. Like you're in charge of 3 and he's in charge of 3. Is that what you do?
I mean, now they're 17, 16, 15, 14, 12, and 6. So they're old enough to take care of themselves and have for, years. So, and then the older ones take care of the 6-year-old. So they're, they're 6 years apart, the oldest or the baby from the next to the oldest or next to the oldest, excuse me.
That is awesome.
That is awesome.
When they were little, it was different. It was a lot harder when they were little.
Yeah, well, because you're actually doing the parenting and you get a little load lightened. And that we had the same thing with just 2.
Yes.
Because they were 4 years apart. Now one's just left to college.
Oh, wow.
Went to the enemy of Arizona to ASU. So
funny. Yeah, my daughter's a sophomore in college, but she's a senior in high school too. So she's 17.
Oh, wow.
Wow.
Yeah,
that's cool.
College last year, which is kind of the same thing I did. So, I wanted her to do the same. There's no sense in children taking high school classes the last 2 years when they can take college classes and get dual credit.
Right.
Correct.
Yeah.
And it's cheaper. So they finish their first 2 years for nothing, next to nothing. And they go, their junior and senior year like I did.
That's awesome. That's a nugget right there for all you parents out there.
A nugget.
Like a drop nugget everywhere.
Hey, and you guys may not, well, no, you probably, Courtney, do. Like, you have to fill out that FAFSA form, and you got to take care of this stuff. And if you can, make sure that you make a lot less money in that year that you're going to show that FAFSA form.
That's right. Well,
I mean, if you're the IRS listening to this, I never said that. I was just joking.
Well, I mean, you know, that's the whole deal. You know, I actually owned an insurance agency and an accounting firm for about 3.5 years. I did P&C, and also owned, you know, I did a full service accounting firm. So, you know, I had 3,500 clients, and I sold that when I was 29. And probably, you know, it's a lot of work. It's a ton of work, you know, but after that, you know, my biggest thing, what I've been able to do is help people redirect living expenses, turn those into business expenses, and show on paper that they make the least amount humanly possible. So, you know, I haven't had to pay taxes in 18 years, which has been really good for me and my family. I just, you know, and you know, the thing is that you get to buy everything you want if you have some sort of home-based business to go along with your brick and mortar business.
Mm-hmm. Nice. That's awesome.
Yes.
So you sold the PNC. Let's talk a little bit about that, because that pertains to a lot of our audience is PNC. So how did you get into PNC? What happened?
I actually graduated when I was 20 with a 5-year accounting degree, worked for my first CPA firm, hated the fact that they worked 100 hours a week during tax season, and decided that was not the route I wanted to take. So I would still do some taxes January through April, but me and my mom owned a retail store. And, you know, I was just trying to get out of accounting any way I could. And some insurance agent from Aflac contacted me and said, "Hey, Courtney, I think you'd be amazing. Somebody told me you're a great salesperson." So, you know, I went to an appointment and not expecting to ever get an insurance because I hated it, I thought. And I showed up and I fell in love with insurance. And so I worked for Aflac. I was the youngest district manager that they ever had in history. I was 21. And then I went to work. I left there. I opened up, it was 37 new groups in 7 months. And I became #1 in the state out of 5,000 reps. And then I left there. I didn't like some of the things that they were doing. Yep.
Hold on. Because I think we can extract another nugget, because a company that we may or may not represent may or may not do a product that's similar to Aflac.
Yes.
So talk about that real quick. Let's just maybe some strategies or some tactics that folks could use, because I'll tell you, if I did half of that, a quarter, a tenth, right, would be 4, we would be really happy. So what do you do, or what did you do?
So, I mean, you know, obviously Aflac at the time offered a Section 125 cafeteria plan. Okay. And so what I would do is go in and literally show the owner of the company how much money they were going to save in order to offer the benefits to their employees. And so that got me in the door. And then, I mean, I just sold and sold and sold. But, and
did you just walk in? Like, did you just go walk in the streets and walk into the place?
That's what I did. Yeah.
Okay.
You know, that's what Aflac taught us. And they put us through a 5-day sales school, and in the middle of the week, you had to literally just walk on a block. And so I went to 27 different locations and asked them if they would be, because I had no clue what I was selling at the time. Just asked them if they would.
Sometimes when you're better.
Right. I asked them if they'd let me share with them what I was doing and how it could save them money and how it could save their employees money. And it was a way to add extra benefits that they didn't have to pay for. And so I think like 17 of them let me book an appointment, and it just grew really, you know, quickly from there. And then I left there, and for a while I wasn't going to do insurance anymore. And somebody reached out to me and said, "Hey, you know, we'd love to have you at RBC Liberty Life Insurance Company." And so I went to talk with them, and I ended up, I was #1 in the country. I was a rookie of the year, and I was 3rd in the country with them. And I was making like $8,000 a week, working 2 days a week, selling life insurance.
What?
And then I found out that they were writing they had written all these universal life policies long, long ago. And because of those policies, the policies were running out because they were, telling people they were going to grow at 12% interest, and they were not. And so I started sharing that with people that the policies were going to run out, and tried to push them into an annuity with the money they had in cash value, and then get them a life insurance policy. And I got an email from the home office saying I wasn't allowed to talk to the clients until the policies actually ran out or started decreasing in cash value. And so I said, you know what? I'm not doing this. So I decided I would never work for an insurance company again. And I became a broker. And I made $45,000 in 30 days after I left there. And then I went and decided, somebody said, well, Courtney, hey, if you can sell life insurance, because I have a 90% close rate. I don't sell any insurance now. I gave up my license in 2016. Just because I didn't, I don't have time for it, don't want to do it. I just push that off to other people. And
offered you a job.
Thank you. So I ended up, somebody said, well, Courtney, we trust you to do all this other stuff. Why don't you do PNC? So I found a little small agency, had, it was a one-room office in a real estate company, had about 500 clients. The owner was ready to retire. And I took that from 500 clients and 3 PNC companies to 3.5 years later. I had a 2,500 square foot building. I had 3 locations. I had 11 employees, 3,500 clients, and it was rocking and rolling. And I literally gave it up because I was short about $2,000 a month in cash flow. And I was going through a custody battle with my ex-husband. And so I put the company up for sale, and I didn't hire an attorney. And literally 4 months after I sold the business, the guy quit paying me, and I lost everything that I owned. Everything was still in my name because he pretty much told me he wanted me to have the business back in 5 years for half of what it was worth. And so I was willing to sign a 5-year non-compete for that. And so after I left and he stopped paying me, because I found out that the money that he was funding the company with was coming from a trust fund that he was not the beneficiary of and was the trustee for. I found out that he was using all those funds, and the beneficiaries were retarded adults, and they had no family, so they had no clue. His assistant told me about it. And then I started going back as an accountant. I found the checks coming from the trust fund, and I decided that it was best that I turn him into the Attorney General's office. And before I could do that, I got a cease and desist to get off his property, and he stopped paying me. And so when I finally did get the money, the IRS took half of it in payroll taxes. So anyway, but I work out of my home now. I have a full service accounting practice. I'm here with my 6 kids. The best thing that could have ever happened to me for him to take that away is I was working so many hours, and now I've learned to take on the clients that I want and leave the clients that I don't want alone. And I'm not working off of commission anymore. It's just set. They pay me a retainer every single month, and life is just really, really nice. So I love helping you guys sell more insurance. I love freeing up money so people can buy the insurance that they need and they can get the coverages that they need. I just don't want to sell it anymore. I think I'm better off over here in my lane and telling people what they need to do. So I'm more of I'm a fractional CFO for 15 companies now, from $500,000 a year in sales to $13 million a year in sales. And then we'll do 3,000 tax returns this year.
Whoa.
Yeah. Crazy.
You are amazing. To go through all that. Wow. 6 kids, you're homeschooling. You went through craziness. You still have a smile on your face. You're rocking. That's awesome. You obviously have a good mindset, and
it got me where, all of those things got me to where I'm at today. I'm an international speaker now. I've spoken on stage this year for Tony Robbins, for Les Brown, for Eric Worre, for Rachel Hollis. It couldn't be any better. And then I wrote a book, and that sold 3,000 copies so far, only because we ran out of copies and we're waiting on more to come in. So,
all over. That's awesome.
yeah, it's been amazing. I mean, but you know what I do now is I teach people the road less stupid. I literally I call it that. Yeah. Well, I mean, it's true. You know, you don't sell a business without an attorney involved to save $300. You know, you don't decide you're going to handle your own insurance because you don't know what you're doing. So, you know, I have an equivalent of a master's degree in insurance. I'm a CIC, but I still don't handle my own insurance. I just know what to look for to tell my rep, this is what you need to do for me. So, you know, I don't have time. I focus on my lane. I stay in my lane and I do what I do best, which is we handle bookkeeping, we handle full service accounting, payroll, all that good stuff. And I speak and I teach people tax strategy. That's what I love to do. And you should do exactly what you love to do in business, and you hire people to do everything else, and then your business will skyrocket.
This is precisely why we do the podcast.
Well, good. I hope I don't think you asked me to be a motivational tax strategist, but I think that's what I am.
That's great. I love, first off, are you down with OTB?
I'm down with OTB.
I was going to see if you're going to do the, yeah, you know me. You know the song.
Who's down with OTB?
That's been a long time since I heard that.
Two things is one, is that how you came up with the name Outside the Box? Is really, you've been in situations where you've really had to think outside the box.
Yeah, I mean, completely. And then we shortened it to OTB Tax. Obviously, the emails are easier than saying outside the box business solutions. Because we specialize in strategy. I wanted people to know that, right offhand. But I mean, you've got to, obviously in this world, there's, if you do not take care of your books, 86% of businesses shut down due to cash flow issues. And the number one reason why they have cash flow issues is because they're not actually doing the bookkeeping, or it's after the fact. And I'll tell you straight up, if you own a PNC agency and you're collecting cash, I had 2 employees steal from me. One was actually, and if you don't do a good job of tracking your trust account, shame on you, because they're going to come after you. Eventually, somebody's going to find the money. And so I had an employee stole about $9,000 from me, and I had one that stole about $15,000, and it was insurance premium. So, you got to make $150,000 in order to pay for the $15,000 that they stole. And, I was so busy running my business that I wasn't tracking my trust account the way that I was. And they were literally going outside of the office, collecting payments, coming in and uploading the payments as if we had collected them. And I wasn't connecting the dots, and they were taking the money left and right. So they'd pocket the cash.
What a tremendous risk too, because, because there's both sides of it, right? You're losing the money, but now that person's not insured. If that policy lapses,
they were insured because they were uploading the payment. It was still drafting out of my trust account.
Oh, I gotcha. Yeah. So independent's a little bit different.
Yeah.
Yeah.
But you're right. It could have been the other way around. They could have not uploaded the payment just to pocket the cash, but they could extend it longer if they uploaded the payment and pocketed the cash so that the client didn't lose their policy. Otherwise, I would have found it a lot sooner.
Right. To play the game.
Crazy.
It's tougher in the captive world because they're, there's one thing and they're on it every, it's, which I love.
One of the
company
perks?
doesn't make money. And it is one of the perks, I guess. Yeah.
I guess.
Is it the one perk?
Yes. Yeah. No, I wrote for 62 companies. So imagine reconciling that, 3 to 62 in about 2 years. And I wrote for those for a year, and then I sold it.
Awesome.
Cool. And
you go, man. Go.
What are some strategies that you can give some insurance? Since you've been an insurance agent and now you're working on tax strategies, what are some of the nuggets that you can drop for us and our listeners?
So I think, I'm big on continuing education and learning outside of, required continuing education. One of the biggest things that I can say that the number one thing that I spend my money on, even payroll, is being a platinum partner with Tony Robbins. I spend $85,000 a year to be a platinum partner. That puts me in the right room with the right people. So I'm marketing, but then it's also growing my mindset. And your biggest problem typically is in between your ears, and what you tell yourself. And I'll tell you, so many business people get so tied up in their business that it becomes their identity. And when I lost that business and I sold it, it really destroyed me for a really long time. And I wouldn't even allow myself to be a professional again. Up until Tony Robbins walked in a room that I was in 2 years ago, I didn't have business cards. I didn't have an email. I didn't have a website, because I was so scared that if I made a decision that I would fail again. And then the other thing was hiring anybody. I was scared to death to hire anybody. So I finally hired somebody. Now we have 19 people that are working with us. I was scared to take on a partner, because I don't like signing contracts. So I've done that now, and, taken some burden off of me. And, so if I wouldn't have done that, I don't know where we would be today, and then just recently, there's this whole thing about scaling. I've gotten 5 new clients this morning who are, almost $1 million income companies. I do a lot in the network marketing space. So, I've gotten those clients, and I just had a conversation with my employees. We're going to be scaling. But it's going to be super scary for the next 2 weeks, because I finally said, after 8 years of losing that company, because I was short in cash flow, $2,000 a month.
Scary.
And I made a stupid decision to sell the business. I could have just fired one person and I would have been perfectly fine. Or I could have renegotiated my cell phone bill or my internet bill or my 27 phone lines that I did not need, or my Yellow Page ad. Back then they had Yellow Page ads. I don't know if you guys do that anymore.
I don't even know what that is.
I do everything for
social. Sit on in the car.
It's amazing. But, I just realized that through personal growth and development, it's allowed me to break through, even though I failed before, I can make that happen. So I spend $85,000 with Tony. I spend another probably $40,000 in travel, but it saves me $66,000 a year in taxes. So, that's a huge deal for me. I'd rather give the money to Tony than I would give it to the government and get nothing out of it. And so I literally teach people, there's not a whole lot that I spend money on that is not tax deductible for me. And obviously same thing with insurance, guys. If you're going out to eat with someone, talk to them about insurance, have a conversation with them. So you write off 50% of your meal, anywhere you want to go. If you want to go to see your family out of town, you need to set up an appointment out of town and talk to somebody about insurance so that you can write all that off. Same thing like this year, I'll buy a Tesla Model X. I'm super excited about it.
Yeah.
So the Tesla, I had a financial advisor. Y'all gonna love this. So y'all in insurance. I had a financial advisor come to me and he's like, Courtney, we need to put money in appreciable assets this year. And I'm like, no, what we need to do is buy a Tesla Model X. And I thought his head was going to spin off. And I'm like, here's why. Because if I buy the Tesla, that's $106,000 tax deduction I can take this year. So what that does, because the Tesla Model X is 6,000 gross vehicle weight, I get a $3,750 electric car credit. It saves me $40,000 in my taxable income because it lowers my taxable income by $106,000, right? Then I get about $16,000 in earned income credit and child tax credit that I would not have gotten had I not bought the Tesla. So I'm saving at least $60,000 with credits and with taxes alone to buy a $106,000 car. And so you just have to get really smart about what you're
spending. It is not just a car.
Yeah. No, it's not just a car. It drives itself, doesn't have gas. So I'm saving money there.
Amazing.
So I can work because I don't have to drive it. I mean, it's just an amazing vehicle. And who doesn't want butterfly doors?
Right?
Yeah, my wife wants one of those.
And you know what? I'm making an incentive. We're going to have our clients, we'll have our top client, we'll drive to them and see them, and we'll let them ride in our car.
Oh, that's awesome.
You know?
So
And then
you don't have to put the magnet on the side, right?
no, when we get the jet, then the jet will be an incentive, So you can buy a helicopter, a jet, you can buy office equipment, you can buy a Tesla Model X. All those things are 100% tax deductible in the year that you buy them. That's why you see like Amazon pays 0 taxes on $11.2 billion last year. It's because they're buying real estate, and what they will do is cost segregate everything. So you got any of you that have bought a building and you haven't done this is a big deal. Exactly. So 39, commercial building is 39.5 year property. So you have to write off over 39.5 years. But if you do a cost segregation study, and you can actually get the software to do it yourself if the building's under $500,000 in value. If it's over, you would pay someone to do that, which is tax deductible too. But the cost segregation study allows you to break out all of the things that are connected to the building as 3, 5, 7, 15-year property. And what that will do is allow you to take bonus depreciation really quickly instead of having to take the whole entire building out of 39.5 years. So huge tax deduction now that you can take if you do that cost segregation.
Craig just leaned in.
Yeah. I mean, I'm mesmerized. I mean, I have a Tesla and I have a building. I don't know if I'm getting all of these deductions.
See, so, I mean, most, and sadly, most accountants do not talk about this stuff. They don't teach tax strategy. And to their defense, I guess the best I can say, because I used to get really angry when people, came to me and they were overpaying in taxes. But I realized, and I had to go back and look, I did not learn in college one thing about tax strategy. We were not taught how to save people money in taxes. And so I have an equivalent of a master's degree because I wanted to be a CPA. And then I realized that a CPA abides by something called a Circular 230 rule. And what that means is that you cannot be overly aggressive with a tax return. And if you are, you can lose your rights to ever file one again. So literally the minute you become a CPA, which they try to push you into being, you are now taught by the government on all the continuing education. There's no tax strategy taught at all whatsoever. It's how to prepare tax returns, how to understand the new tax laws, but there's nothing teaching you how to save clients' money. And so you work for the IRS, so they scare you into not writing off business use of your home, not writing off, your Tesla, not writing off expenses if you have more expenses than income. None of those things cause you to be audited. And so they're scaring people into not taking deductions so they don't get audited, so they don't lose their livelihood. And so I don't have that problem. They can't take that away from me. So,
and not to get into some little sidebar conversation about it, but think of the reason being, what pays for everybody's tuition to go to school, right? It's all just a big bunch of bullshit, if you ask me. Oh no, I got to check the little box.
You did
blew
it.
The episode.
I'm sure you guys, I don't know, how many people are here that are paying people as W-2 employees to work for them. But the worst thing you can do is pay your employees as a W-2 employee. The best thing you can do is pay them as a 1099 for them, not even for you, because, and that's what we're doing here. Like, I'm trying to push people out of my house because I have 3 full-time employees that work from my home. I want them to work from their home and be a 1099 subcontractor, because last year with the new tax laws, they took away all W-2 employee expenses. So unreimbursed employee business expenses, that doesn't exist anymore. So they can't write off their mileage. They can't write off their cars. They can't write off their meals. They can't write off anything that they spend money on as a W-2 employee, but they can if they are a business owner. So, 1099 subcontractors is definitely the way to go, because then they get all these business expenses and they're not getting hit with FICA taxes at their gross income. Now they're getting hit with it at their net income. We can teach them how to have an LLC, treat that LLC as an S corporation for tax purposes. Then they're bypassing 80% of their self-employment taxes, and they're much better off. They're happier. You guys don't have to pay FICA taxes, unemployment. That all goes away. It's just stupid that we teach this. And hold on a second. Is that good? We're good? Awesome. Love it. I'm sorry. My husband just posted an awesome thing that if we taught everybody to have some sort of home-based business while they're in college, they would literally save $120,000 to $240,000 over the next 30 years. So that would pay for college, right?
What about that?
Nugget. So I need to have my daughter do a home-based business from college?
Well, you can hire your daughter to work for you instead of paying for her college. She could, definitely have a home-based business, but you'd hire your daughter to work for you. You can pay her $12,000 a year, and she doesn't have to pay taxes on it. So you pay her, she pays her college. Even if it was more than $12,000 a year, she's in a lower tax bracket than you. So you pay her, and then she pays for her college. Now you can tax deduct her paycheck. You don't have to withhold federal and state taxes on the first $12,000. The only thing that you would have to pay would be FICA taxes because she's over the age of 18. But if she's under 18, there are no taxes at all that has to be taken out. And there's no unemployment because she's not entitled to unemployment to work for you. So I do that with my 6 kids. That's 6 times 12,000. My daughter, my 6-year-old, I have her invite friends on Facebook. And somebody yesterday, I showed a video of her inviting friends to prove, I keep telling y'all to hire your kids. Now I'm teaching you what to do to get your kids to work for you. And they can do anything. They can file paperwork. They can, do data entry. But my 6-year-old, literally, I'll hand her a phone and say, baby, hit the invite button. And so she'll hit the blue button. So some real estate agent in Charleston, South Carolina, decided he was going to send me a message because I said, hey, if you get a message, an invite from her, please join. And so, because she's doing it. And he said, stop, please have her stop. And I said, well, 1, she doesn't read. She can't read yet. So we're working on that. And 2, you need to just go ahead and unfriend me if it causes you grief that my 6-year-old is inviting you to something. And if you don't want to save money in taxes, that's what I'm here for. So obviously, if you haven't joined my group, you don't need to be my friend. So done. So he unfriended me. I mean, you can't fix stupid. You can't.
No, you can't. So you're talking about a lot of really awesome stuff, and I don't even. There's so many nuggets. I don't even we're buried in nuggets. So thank you. But
I'm buried in nuggets.
I'm real interested in this in the W-2 versus 1099.
Yes.
So if you have somebody who's a 1099 employee, could you require let's say you have a phone system that you use and then they have a phone system. Could you require that they use a certain type of phone system?
Well, I mean, if you're providing it to them or, they're buying, you don't have to necessarily make them required, but you can. The only thing you can't do is pay them hourly, and you can't manage what they're doing. So you could pay them per job. So most insurance agents are paid commission anyway. And so you can do that and still get away with it. But it's better for them. And we've got to start educating people why they need a home-based business. We have to start educating them on that. Even if they had an office that they went to a couple days a week, by being a 1099 subcontractor, now we can write off their business use of their home. So a portion of their utilities and their insurance and their taxes and depreciate their home and write off their meals and their mileage and cell phone, all that stuff becomes tax deductible. Whereas the only other option would be to take the W-2 employee. If you needed to manage them, then you would take that and you would get the employee to have reimbursable expenses. So they would in turn send you their gas receipts, their cell phone bill, their internet, all those good things, and you can reimburse them for that and lower their W-2 income.
But as that's awesome. So, but then as an agent, like having independent contractors, because most of us have W-2, right?
Yeah.
But if we set them up as 1099 contractors and they want to use this phone service and I want them to use this other phone service, I don't have much wiggle room. I'm not allowed to tell them what to use, right? If they're 1099?
No, that's not true. You can't manage them. You can't tell them on a day-to-day basis everything that they need to do. Like you can't physically manage them. But the other thing, to even bypass that, which they would be better off anyway, if they make more than $10,000 a year in net income, they're overpaying in taxes by not having an LLC, which I'll tell you, we charge $200 to set up an LLC. We charge $200 to set up an S corporation. And so those two things, plus whatever the filing fee is for the state, depending on what state you live in. Some are, most are under $150. California's $800. Okay. So, but they would be better off if they make more than $10,000 net. They're overpaying in taxes every single year, $1,500. Okay. Mm-hmm. So what we do is we set them up with the LLC, treat as an S corp. What the S corp does is it allows them to treat their income as a business, so they have a separate tax return, and that income would flow to their personal tax return without them paying self-employment taxes. So to the W-2 world, they're getting rid of FICA taxes on their gross income, right? Mm-hmm. Now we put them in this LLC and treat it as an S corp, and we're bypassing all. Well, I would say I say 80% of their self-employment taxes, because they have to show some sort of paycheck. So we typically do 20% of their net income as a paycheck. So let me break it down for you. And I'll give you another reason why. Okay, so if I took $100,000 a year W-2 employee, okay, they're going to pay on average of 40% in taxes. So they're going to pay about $40,000 a year in taxes. Okay. I took the same $100,000 a year 1099 subcontractor who's running their business out of their home. They've got a cell phone, internet. They've got their own. They're going on vacations because they're talking to people when they're there, right? So travel, and then they're doing continuing education. They're doing all these things. All these things they're already doing anyway. They'd have at least without a shadow of a doubt, they'd have at least about $35,000 in expenses that they would be able to write off. Not necessarily expenses they're spending more money on because they now have a business, but that gets them to $65,000 a year. So I'm going to make it easy. I need to say 60. That'll make it easier for me. So that $60,000 now, if they're in an S corporation, they would pay themselves 20% of that as a paycheck. So 20% is $12,000. Okay. Instead of them paying $7,500 in self-employment taxes, or half of that would be so they'd pay as $100,000, they would pay $15,300 over here as a W-2 employee in self-employment taxes, but they would pay half. So that'd be $7,500. So over here they're going to pay $7,500 in FICA and not even be able to handle. There's nothing they can do about it. Over here, they now have a net of $60,000. If they didn't have the S corp election, they would pay $9,000 in self-employment taxes, which would still be a $6,000 savings. Okay, but by having the S corp election, they would only pay $1,800 in self-employment taxes, as opposed to the $15,000 or the so it's $7,500 over here as a W-2 employee. So even though they're paying a higher percentage, they're paying much less. They're paying based on $12,000 as opposed to $100,000. Now, on top of that, there's a 20% pass-through entity deduction that they're entitled to because they're a business owner. So there's $12,000 more dollars they don't have to pay taxes on. So their taxable income is now $48,000, or that's their after expenses is now $48,000 minus the $12,000 that they're paying themselves. Okay, that gets us down to $36,000, and the standard deduction in our country is $24,000. So they're only paying taxes on 12.
Wow.
Which looks great for college.
Yeah.
Done. Yes.
I'm going to have to chop that part out and just say, okay, do you want to do this or this? And I'm going to have you talking.
Yes.
Yeah.
So what I'll do is literally, I mean, I can show it to you guys on paper.
Yeah.
I'll do it easier. And I have an actual, I have a presentation that I use, and I show people, here's a W-2 employee, here's a W-2 employee with a home-based business. And if you're just a business owner, obviously, you get even more tax deductions, but a W-2 employee can move over to this category because we have two tax systems in this country. One is created to take your wealth, which is for a W-2 employee, and one is created to create your wealth. So we as business owners, we get the benefit of creating more economy, of hiring more employees, and we get massive tax deductions because of that. So then somebody has to pay taxes in this country. That flows to the W-2 employee. They pay the taxes. So in this country, and I'll shut up, okay, and you can do whatever you want. But I get super excited about it because in this country, the average household makes $60,000 a year, a family of four, and they pay $14,000 in taxes. So their take home's $46,000. Cost of living is $53,000. They're going in debt $7,000 a year to work, 40 hours a week, 50 weeks a year to take 2 weeks paid vacation. And so I know without a shadow of a doubt, if you just took that and started a home-based business of some sort, which is where they're at, they've got insurance, right? They can be a 1099 subcontractor at home, have their own business. They're going to save minimum of $4,000 to $8,000 a year over the W-2 income.
Wow. In that sheet that you have, if you wouldn't mind, we could upload it to our group.
Yes.
With your information on it and everything. So I'm sure you're going to have a lot of insurance agents reaching out to you shortly.
Dudes and dudettes.
Dudes and dudettes. And then I have a couple questions for you.
Okay.
One is, there's a lot of people using virtual assistants these days overseas.
Yes.
Any advice on, a lot of the virtual assistants want to be paid, let's say like PayPal or something like that. How do we do that?
I hate PayPal. I mean, as an accountant, it's very tough to track. You can't reconcile anything. We obviously have clients that are eBay, and they're doing $100,000 a month in sales on eBay. What I would suggest is if you're paying somebody through PayPal, do not have money in PayPal. Like, let it just draft from your bank account so that when somebody's doing the bookkeeping, it makes it simpler to be able to determine what you're paying. So if everybody you pay through PayPal is a subcontractor, that's super simple. But if you're paying for 100 different things through PayPal, it becomes extremely hard to figure out what's what, because it has, a lot of times it's got Chinese people's names. And so if you're buying stuff through PayPal, I would maybe set that aside, like have a different account pooling, like one for subcontractors and it's coming through, and have a different bank account if you could for the supplies and everything else that you buy. That'll just make life easier. In this country, you don't have to send them a 1099 if they're out of the country, but you do need to be able to keep up with it. And then especially with insurance, when you're dealing with workers' comp and general liability, you've got to be able to pull that out somehow to show them the 1099 subcontractors.
That's awesome. Also, what about somebody that's selling an agency?
Yes.
What advice, because that's a lot of income.
What I suggest, and it's hard for me to say this because I got burned, but I would not in any way sell your agency and get a lump sum right now. I would do it over years and do an installment agreement. I would just have a really good attorney. The biggest thing with me is that have some sort of recourse that you get to take it back over if they decide to stop paying you. But you're going to lose half of your income in that agency if you take all the money right now in a lump sum. Even if you took part of it in December and part of it in January, that's going to cut your liability, drastically. I've got a really good financial planner that actually specializes in helping businesses sell their practices before they sell it, to force it into almost virtually paying no tax on it. So, and it's very safe. So I would love to connect you guys. I'll give you the link to the guy's email. His name is Brian Ripple. He's a huge broker. He owns his own broker dealer, and he's just amazing wealth of knowledge on, he does a lot of strategy. So he teaches people, we were just talking, I met him as Tony Robbins Platinum Partnership, and I met him and he was telling me some things that I'd forgotten about, like conservation easements. You can put money into a conservation easement as a partner in land. That's where you would give land to the government. But there are these funds you can put money into and you get a 4-time donation. So you could put in 20 grand and have an $80,000 tax deduction. You can put in 100 grand and have a $400,000 tax deduction. Wow. So he's just a wealth of knowledge. Yep. So they're called conservation easements. So the government, obviously is trying to force people into giving up land. And in order to do that, and they can create industrial facilities out of it or whatever. So they give them a 4-time multiple off of it if they put the money into these conservation easements. So I'll give you the contact with him. He's a great he's a great guy for sources of knowledge for even tax strategy. I mean, he's told me some things that I forgot about from college, and I'm like, oh my God. So we're working together a lot. The other thing is I would reach out to him if you want to sell your business. I mean, he's got some great ideas to be able to force you to not have to pay anywhere near as much in taxes. Because he said the biggest thing that he has is he'll have people come to him after they sell it and say, what do I do with my money? And he's like, I could have gotten you twice that much money in your pocket had you not done this way. So there's a big difference between an asset sale, because you're depreciating all the property, and a stock purchase, so which is a much better way typically. But he's got that dialed in. That's what he focuses on, is people that are ready to retire in businesses and helping them flow the money through.
Love it. Yeah, we would love his info, because I've heard there are a few agents that might be selling, and that would be super helpful. I've heard.
You heard. Yeah. I've heard too.
That's awesome. And we definitely want to put your information. So how can we learn? How do we learn more? Like after this podcast, how do we learn?
Join your group. Let's link your group to our group.
Yep. Yeah. So I have a free Facebook group on Facebook. It's called More Relaxing, Less Taxing, which is super helpful. That's the name of my book. And love it. Why You'd Be Brain Dead Not Own a Business. So the other way is I have a membership that I created, and it would work. It works really well. It's not going to work for agency owners. It would work for the subcontractors. So agency owners, I feel like they need to be in QuickBooks. There's so much that goes on. It's just super hard to get out of that. But I've created a membership that literally gives all of my tax strategy on a weekly basis. I give them $49 unlimited tax strategy sessions. I give them 15% discount off everything we do for them if they want us to do their work, their taxes, bookkeeping, all that good stuff. I also do a Q&A live every Sunday from 2 to 3 o'clock. So there's just a lot of things in that membership, and it also gives them a software so they can track their mileage. Even if they're using a different software, you need a mileage tracker, so it gives you the mileage tracker. It allows them to take pictures of their receipts. It allows them to connect their calendar in there, so they're really virtually audit proof if they will utilize that software and upload the receipts into it, and then we can connect that. So, that is $39.95 a month. I mean, like it's nothing. It's is tax deductible. What I did is I started running out of time, and I started answering the exact same things on every 45-minute call. And so instead of me answering those questions, I've now created this membership that they can go into, and a $50,000 a year subcontractor will get the same information as a $5 million a year company owner, business owner, network marketer, whatever they happen to be, because I feel like everybody needs this education. I just can't give it to everybody on a personal basis. So that I can send you the link on it, that they can contact. They can obviously, on our website right now until the 31st, we have a $49 tax strategy session that they can sign up for. So they can schedule it, pay the $49, and I'll talk to them and look at their tax returns, review them, and see what I can do to help them. The biggest thing I see in agency owners is they don't have an LLC, and if they do have an LLC, they're not treating that as an S corporation for tax purposes, and they're losing money hand over fist in excess self-employment taxes that they don't have to pay, and then they're paying themselves too much. So even if they do have an S corporation, typically their accountant will tell them to pay themselves, $100,000 a year. They're just overpaying themselves. It should be 20% of their net income. So if they cleared $500,000, they should only be paying themselves. Honestly, I would pay them $75,000 a year would be the max that I'd ever pay anybody to do anything.
Nice.
Be a distribution that they then do not have to pay self-employment taxes on.
I mean, there's so many nuggets. I'm just blown away.
I know.
And so the course, the paid course, you're suggesting that would be better for our contractors if we move from W-2 employees to contractors.
The software in the course would work for everybody on mileage and receipts. So it's worth it just for the software. That software for the subcontractors, though, they can literally pull in their bank statements, their credit card statements. It will record the transactions for them. All they have to say is what it's for. And they only have to say that one time, and it'll remember it throughout. It doesn't process payroll through there, so it has definitely some limitations. If you have an insurance agency, you need QuickBooks online, not desktop, online, to pull in those transactions. We can do the same types of things, but for an agency owner, the membership just for the tax strategy alone is worth the $39. But then on top of that, they get 15% off anything we do for them. So if they want us to do their tax return, I'm literally kind of giving it back because I'm taking the liability off of me. Like I'm giving everybody every tax strategy that I know. Like every week I do at least 3. Last week was cost segregation, research and development cost for technology, and it was and talking about the conservation easements. So every week, and then I talked about hiring your kids, and there was one other thing, maybe business use of your home. So it's always geared to handle the high income earners, and then also geared to handle, a couple different strategies to handle someone who's just getting started in a business.
That's great. I love it.
Thank you.
I'm going on.
So, yeah, I mean, and I don't know. There's too much rattling around in my head.
And then I'll give you some insurance advice, some insurance stuff. I'll tell you, if you want to sell some insurance, you go in behind. I literally took a client that had AIG, was a workers' comp policy. They reached out to me and said, hey, I think we're overpaying a workers' comp. I left them with the same company. I just actually looked at their class codes. So the old accountant was listing them as a logging company, and they were actually they put in granite countertops. And so they had been overpaying in taxes for 15 years. And the other thing is I broke out their overtime from their regular time, because typically insurance agents don't like to handle the audits. And so that was really good for me because I became a millionaire off of that. I could literally just do audits for people, save them hundreds of thousands of dollars, and take your client away from you for the exact same company and just do nothing but help them with the audit, because you don't have to pay overtime. And most accountants aren't breaking out the overtime from the regular time. So if you send them to the accountant doesn't understand insurance. So they don't realize it's important for these people to be broken out for overtime and regular time. So you don't pay taxes, you don't have to pay workers' comp or general liability on overtime. So I was able to break out $4,000 a week in overtime for this guy, saved him $35,000 a year with AIG, and changed his class code. And what we did on top of that is broke out all the classes to where there was a salesperson and there was a clerical person. And we even broke it down into people. If they were spending 10% of their time in the office doing clerical, 20% doing sales, and 70% doing install, then that's 30% that they're paying at a much lower rate. So, that was the strategy that I started, and then that turned into an entire accounting practice just because I couldn't get the accountants to do what I wanted them to do to save my clients money.
Wow.
So
good.
So Neil Trakarik, I have to throw his name in there. So he's my business partner for Agency Vault. And he came to me and said, hey, you've got to talk to Courtney. And I said, well, tell me about her. And he said, no, you just need to find out. And so it's been sort of, we weren't sure. And we did a little back look, but this by far exceeded the expectation. This was phenomenal, Courtney.
This is the greatest podcast of all time. I said it.
It likely is the greatest podcast of all time. You know that feeling you had when you were a kid the night before Christmas, on Christmas Eve? That's what I feel. That's what I have.
I love it. We just have to share more. We just got to.
You will be back on this show.
Okay.
Whatever we call it. Unless you don't want to be.
No, I'm good. I love sharing. I don't do this for money. It's but because you do it, because you don't do it for money, it's like money just comes. You have people get what you want, or get what they want, you automatically get what you want.
Yeah. Well, you're hanging out in that club with Tony. It's pretty amazing.
Yes. Eric Worre is actually even, to another extent, there's a whole group of 20 million network marketers that are being told every day that they don't have legitimate businesses, that they don't have, that they can't write these things off. And so, that's a world. And even here, even now, like the small to medium-sized businesses, they don't get the same tax strategy as the $10 million companies. And they have the same benefits. They just don't know the information. And I'll give you, for instance, like my swimming pool. So I put in a swimming pool. This is knowledge for you. So swimming pool, exercise facility, a golf course, or a tennis court, you can offer that to your employees. And if they work on your property, then you can write it off as a fringe benefit. So it's 100% tax deductible. And because my employees are my children and my husband, and I allow them to swim in my swimming pool, my property is 100% tax deductible.
There you go, Jason. Put a swimming pool in and hire your kids.
Yes.
But my oldest is 7. Can I do that?
Actually been held up. I just told you I hired my 6-year-old, and she invites people on Facebook, right?
That's so good.
Even if
it's in California. Can you do that in California? It's a little weird.
Been held up. There's no labor laws for your children. They're not entitled to laws.
What about my 2-week-old?
Anybody in this country can get paid $12,000 a year, right?
2-year-old can. Wow. A 2-week-old can press the buttons on the iPad already. Come on.
Right. Exactly.
And she's a preemie, so she's tiny. She's a little tiny thing.
Give her a regular iPhone, and it'll look like an iPad.
You can take pictures of her and market her for your insurance agency, and instead of paying somebody a modeling fee, you would pay your child that.
I love it. This is great. Let's just keep going. We should put together a poll in the group so that maybe in a couple months we can get you back on the show and have some of the top insurance questions, and hopefully a lot of the agents will
I anticipate that you're going to get some business out of this.
Okay.
Yeah.
That's good. Yeah, I'm already doing every 30 minutes with tax strategy sessions. So
Well, you are awesome. Courtney is so great. So great to have you on the show.
Good.
I appreciate it.
Jason woke up. Jason woke up. Who would have thought that you could wake somebody up that was tired by talking about taxes?
That just had a baby.
Better than coffee. This was better than coffee.
Was it better than what he took?
Yes, it was.
I gotta take a picture of my screen before you guys go. So I'm gonna say that Jason Feltman said I was better than coffee.
Hey, let's all take pictures.
Whoa,
Yes.
Yeah.
That's so good.
I'm gonna do a selfie of me in the. There. I'll make that into a meme.
That's hilarious. Yes.
All right. And if you want to join the group, we have the Insurance Dudes group. Join, and then you can lurk around and grab people. We'll introduce you, and we'll get that going. So Neil's in there too.
Awesome. Did you send me a friend request or a invite on that one, or
I will send it shortly.
Okay, that sounds good. And I'll keep adding stuff in there as far as, I post content almost every day. I won't post just things related to insurance.
Damn it. Damn the hell out of it.
I'll put it.
Yeah.
Well, Courtney, thank you. I'm going to press
so
the
much.
stop.
55% of insurance sales producers say that they have had little or no sales training. Us agents focus on marketing to drive activity and often overlook the sales presentation. Improvements in mindset, shifting focus, rapport, needs diagnosis, value building, creating buy-in, and overcoming objections lead to drastically better closing numbers. The solution? Enroll your team in September's Sales Summit offered by Agency Vault. We will even assess your team to see which of their sales steps need the most improvement. Head to agencyvault.com to sign up before it's full.
Hey, thanks for checking out the Insurance Dudes. Hey, please subscribe. We got some really great stuff coming out.